Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES failed at 2098 and sold off all the way down to 2084, at which point responsive buyers stepped in and the market started balancing. At this point, heading into the open, the market can still tip either way. Bigger picture, we know that we are stuck within a range. We're simply trading within a balance. And heading into the open, the market is very balanced as well, and it can really tip in either direction. So we know that overnight the other markets also tested support and they bounced off of support. ES is still relatively stronger compared to the Russell, and there's still potential for buyers to step in here and move it back up beyond 92.5 to 94.5. On the upside, that is really the primary inflection point. If we can see a breakout above 92.5 to 94.5, that would confirm the buy side back in control, and from there we could see a move back up towards the overnight high, the previous day's high at 2100 quarter, and the 02 quarter to 04 quarter zone, which would be the final upside objective in the event of a breakout above 92.5 to 94.5. On the downside, we have pre-market support at 84 to 86. That's the area where the market found responsive buyers in the overnight session, and that's still a zone where the buy side can be active. So off the open, unless we're seeing strong downside momentum with the tick holding purely below zero and the advanced decline not only opening on a weak note but actually holding that weakness and even getting weaker, then perhaps we can actually see a break of 84 to 86. Below that, we have initial support at 79.75 to 81.75, but in the event that we slice through the 84 to 86 zone, if we're going down on very strong momentum, then we do have to be careful at the 79.75 to 81.75 zone, because if the sell side is really stepping in and the other markets are also breaking their overnight lows, then we may not get much of a response at 79.75 to 81.75. It may just be a pause point before ES goes down into the short-term balance area low at 73.75 to 75.75, which is still a zone where responsive buyers can be active on first test. In the overnight session, we saw the market moving on above average volume, and if that theme continues into the regular trading hour session and the volume is still fairly strong, then we know that we can get some decent intraday volatility and a better range on the day. So just be aware of that as well. Keep an eye on the volume situation to see whether the volume is lightening up a bit and heading lower, or if we're actually still trading on above average volume, because that can result in a wider range or at least in more intraday volatility. So right now we do have to be very flexible with our overall bias. Short term, we know that the market has to get at least above 90 quarter in order to show us at least some signs of buyers being a little more aggressive. Holding below 90 quarter just tells us that the sell side is actually still a bit more dominant, because ES at that point would be holding below the previous day's low. And again, it can tip in either direction, so you have to be very in tune with the immediate momentum situation in the market. And right now we know that the market can either go down into the initial support, possibly the bounce area low, 73.75 to 75.75, and then if buyers really step in and the other markets start to head higher as well, then we know we can head up to initial resistance, and from there possibly up towards 98, 2100 quarter, and finally 02 quarter to 04 quarter. Keep an eye on the Russell. If you're watching TF, keep an eye on roughly the 1205 to 1206 half area. That is short-term support, and if Russell fails to hold 05 to 06 half, then that would be another sign of weakness, and it could lead to lower prices in the S&P as well. If you're watching NASDAQ, keep an eye on the 4517 level. That's a key high volume node in NQ, and if you slice through 4517 on the downside, then again that would signal the sell side being quite aggressive, and it can lead to a move lower in the S&P as well. So right now, very balanced, very two-sided. Overnight, we know the sell side is dominant, but that doesn't mean that that theme has to continue into the day session. The buy side still has potential to take over, and we have to be open to that possibility. How the market reacts to 84, 86 is going to help us figure that out. how the market reacts to 90 quarter will give a clue, but really 92 half to 94 half is the inflection point on the upside. Until we break out above that zone, it can be very two-sided, it can be very balanced, and once we get the break, as long as it's on some decent momentum, then we know which side is in control and the side that's dominant, and then we can focus on trading in that direction. But for now, we have to be open to a move in either direction, and again, just be very much in tune with the type of momentum you're seeing off the open. Keep an eye on these other markets. I think they can provide a nice heads up. Any strength in the Russell could lead to a pretty nice upside move in the S&P as well. We know the Russell's been relatively weak, so if that market starts to get a bid and gain some strength, then that can drive the market higher here as well. So those are our main ideas heading into the open. As far as the econ reports go, we have FOMC minutes out at 1 p.m. Central Time. Aside from that, no major catalyst. So just be cautious around that time frame. But the morning session, there's not really much going on. So let's just see how the market reacts to 84.86 and 90 quarter, 92 half, 94 half off the open. Let's see which way the momentum is really leaning off the open, and then see if we can secure some good trade location to get on board.